Hey everyone, in this video I wanted to do an interesting comparison. I wanted to answer which one is the better dividend stock. Is it 3M or is it Verizon? Now to answer that question, I'm going to compare these two high yield dividend stocks across four financial metrics, of course including dividend yield. And then towards the end of the video, I'll answer which one is the better dividend stock to buy. So let's get right into it, starting with the dividend yield. Now looking at these two stocks, they both boast very healthy dividend yields over 5%. 3M with a higher dividend yield of 5.91%, Verizon with a dividend yield of 5.25%. So both dividend stocks offering a very healthy dividend yield. The next metric I wanted to show you is these companies' revenue. And if you look at their revenue, what jumps out is the different scale of these two companies. Right? You can see Verizon with trailing 12-month revenue of 136 billion with 3M of trailing 12-month revenue of just 33 billion. Looking at revenue growth prospects over the near term, I would say 3M has better revenue growth prospects. 3M benefits when people spend more money on goods rather than services. And over the last year or so, people have been absolutely spending more money on services because during the pandemic, people spent more money on goods. And so now there is a greater demand for spending money on services, which will likely persist, I would say, for at least the rest of 2023. But then starting 2024, the balance of spending will probably revert in favor of 3M. Now, Verizon revenue growth is likely to be very, very slow, if any. Verizon, remember, operates in the wireless connection industry, right? Cell phone plans, data plans, things like that. And pretty much people, anyone who wants a cell phone, a smartphone, already has one. Limited areas for growth for Verizon. And on top of that, T-Mobile is boasting a competitive threat to both Verizon and AT&T that should bring revenue growth even lower because now Verizon and AT&T might need to lower prices just to stay afloat with T-Mobile, which is offering lower prices. So I think for those reasons, 3M has better revenue growth prospects. Now, I also wanted to look at cash flow from operations to sales over the trailing 12 months. And in this metric, these two companies have flip-flopped. Verizon was ahead in terms of this metric between 2014 and 2017, and then 3M took over for a little while, and then now Verizon is back in the lead in terms of cash flow from operations to sales. You could see here 3M that decline as soon as economies reopen. 3M's cash flow from operations to sales kind of sliding, but finding a floor and recovering now going forward. Now, over the near term, I would say Verizon has better prospects in this metric. However, in the longer term, I wouldn't be surprised if 3M catches up to Verizon in this metric for the reasons I mentioned earlier. Finally, I wanted to look at valuation. I wanted to see how expensive these dividend stocks are, and they're both down considerably off their highs, and they're both relatively inexpensive. 3M stock is trading at a forward PE of 10.6, while Verizon stock is trading at a forward PE of 7.97. So, all that being said, if I had to pick one of these two dividend stocks to buy today, I would pick 3M. I would pick 3M, which is interesting for me because typically I will choose the company that's demonstrated better profitability, better cash flow with a cheaper valuation. But in this case, I'm not choosing so because of what I talked about earlier about the prospects going forward. I like 3M recovering its revenue and profitability. However, I see Verizon's revenue and profitability pulling back over the next several quarters and several years because of the competitive threat that's forming in T-Mobile. Verizon had it very good for several years when itself and AT&T were kind of playing this friendly competitive game where they weren't competing too fiercely with each other. T-Mobile is coming in and really messing things up, offering lower prices and promotions where Verizon and AT&T are like, "Hey, what are you doing here? Let's all get along and let's all make some good profits for us." But T-Mobile not playing that game. T-Mobile coming in, taking market share, and it's showing in Verizon and AT&T's results. All right, so that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.